All right, good morning, everybody. Starting the YouTube side of this a little bit early to mention that the uh, Introduction to Options class is starting at the end of June, I believe. Been doing updated videos on the class. Looks like we're going to have at least 40 hours. Um, the class is going to cover what options are and then cover how to use them, how to trade them, how to apply them in the market different ways, either as a premium trader, as an investor. I'm going to run the gauntlet of everything. Uh, this is a part of the Bullish Bears coaching materials. So if you're interested in group coaching, join the Bullish Bears Discord and go to the group coaching tab or reach out to me. My name is Signet. Just hit me with a direct message on the Discord and I will send you a video that I have made talking about these classes in more detail. All right, let me bring in the Zoom group. All right. Good morning, everybody. Lagarde is speaking right now, so be aware of that, right? Whenever you've got European Central Bank president speaking, you want to kind of be aware of what's going on out there. Before we get too deep, I wanted to point this out just so I don't forget, because I'm very likely to do that. The MOC yesterday, and this is MOC from Market Chameleon. They do things a little bit differently. When it comes to MOC, just for anybody who might not grasp what we're talking about here, you can do an MOC order, I can do an MOC order. They're not specifically for institutions, but they are something that we monitor. And if you watch things like Finance Juice, you'll notice that they start putting in the buy side and sell side MOCs, the imbalance of those near the end of the day every day. This at Market Chameleon is a little bit different. They have a criteria, and their criteria focuses on at least 50,000. So if a company has at least 50,000 on their MOC or better, or if it hits X amount of shares, then it will make this list. Right here's their criteria: 50,000 shares. So this is something that I monitor every day, and we download this data and put it into a database that I've been keeping. And I've got this database that goes back almost a year now, since September of last year. So it's something we look at all the time. And every day when it comes out, we download this list, we put it into the database, and then we check things like what sector was heavily bought, what sector was heavily sold. Is there a peer group? Is there a particular name that's just getting hammered on again and again and again, whether it's the buy side or the sell side? Another thing that we do, though, on that day-to-day basis is look at the size of the MOC. And lately it's been, in the low hundreds, not really very wow numbers. Even the sell side here, less than 100. And the sell side here on the 27th, less than 75. So it's been low. And then yesterday, 504 on the buy side, 304 on the sell side. There was a lot of activity going into the close yesterday. Now, if you want to learn more about MOC or how financial systems track MOC and going into the close and why it's important, you can go to someplace like the CBOE website. They've got tremendous amounts of data on this and back testing and research and just really valuable data. And it's free. You can go to the CBOE and get all kinds of information for free. So if you want to grasp more about that MOC part of the day, which is, the last 10 minutes of the day is when MOC is. So I just wanted to point that out. There was a tremendous change in the MOC going into the close yesterday. I knew if I didn't get that done first, I would forget. All right, so we got a lot on the agenda today. I named this stream a part of it. Yesterday was consumer confidence. Today it's more about employee confidence. The JOLTS number is coming out today, and that's a fancy economic phrase for take this job and shove it. When an employee thinks that they can go somewhere else because the labor market is really strong, the grass is always greener on the other side, right? If they think that they can quit their job and find another job really easy, those jolt numbers reflect that. On the other hand, if there is a job scarcity, like there was, say, back in 07 and 08 during that whole fiasco, I remember working in the oil field and you hung onto your job with both hands. You did everything that you could to keep that job. And around you, you watched everybody slowly getting laid off, right? Just picking them off one by one. And it was a rough time. You could just see that your potential to go get another job was going to be really difficult. And the job numbers back then were reflected in JOLTS, right? So we watched the JOLTS number on the day that it comes out because it reflects that sentiment. So while yesterday was consumer confidence, today is more about employee confidence, the JOLTS numbers. We do have Redbook. We've got construction spending. So there are other ones on the list. But for me, it's the JOLTS. We got manufacturing, which is a really big deal, right? The whole supply chain issues, blah, blah, blah. We got Bullard speaking today. We got the beige book. So it's going to be a busy day. And a lot of this busyness is important when it comes to anybody who's trying to take some swing trades, right? And we see people coming into the bullish bears every day. They're kind of new and they're focused on, hey, is this a flag? Is this a rising wedge, a cup and handle? Because I'm looking at a daily chart and I see this pattern and I'm going to take a trade. That pattern is the last thing that should encourage you to take a trade. Long before you get to that pattern, you would want to first identify what's going on in the indexes, the sectors, that company's peer group, and then what's going on with that company. News, any upcoming news. Think about what that company produces, what its widget is. Then go and look for a pattern or a setup or a reason to trade it, right? That pattern is the last step. So on a day like this, when we have all these different economic situations coming out, we can go from a positive day to a negative, or from negative to positive and back and forth and vice versa. The market does not have to stick to a bias. So it is important to realize that if today is range bound, very similar to what yesterday looked like, then that's going to be reflected across the board in 8 or 9 out of 10 different stocks. Check the top news. See if there is anything on the list from the overseas. Most of the time, it's going to be no, right? Don't try to invent something that isn't there. Just stop in, take a look around. Last night on Bloomberg, it was showing Asia, and everybody was celebrating because the lockdown restrictions had eased a little bit. They've been in lockdown for like 2 months. This is going to slowly begin to help supply chain issues, but they still are running a zero tolerance policy, and that means they could go right back into lockdown again. All right, so we're on a daily chart right now for a reason. We are focused on where we are in relation to yesterday's candles. We're inside day. Now, when it comes to inside days, you might notice that we're still sitting inside of Friday. Sure, we got outside of it a little bit, right? We kind of wicked through and then came back down. but we're still inside day. And after that rally that we had, it kind of makes a little bit of sense that we would pull back a bit. For this to just be a pullback, however, we really need to maintain inside of yesterday's range. So if we break below yesterday's low, it kind of takes off the table the idea that this is just a pullback. And that instead, we're looking at a reversal, right? Now, if you notice, since the Fed meeting back in March, when we broke above the 10 and the 20, we had that nice little rip up into resistance. We dipped below the 10 and the 20, and we haven't really been back above it. A little head fake right there, but otherwise, we've been maintaining below the 10 and the 20. Until Thursday, when we broke above it, and then Friday, when we extended our rally beyond it. It's not the first time that we've seen such situations. It won't be the last. Nobody is calling this the end, right? Back here, we broke above it and dumped back down. So we're just noting where we are, noting where it is in relation to the major moving averages. The other day in the Discord, somebody shared this indicator. I have loaded this indicator into the Thinkorswim workbook. It marks out the Asian session for you. If you want to understand more about why the Asian session is important, go back and check Rose's videos. I think she covers it in pretty good detail. I think she covers it in detail because I don't know. I don't watch her material, but it's what I see in the chat. People talk about. It's what I see her write about in the chat. This range indicator can also be used for other purposes, including the IB, right? And the IB is the initial balance. The initial balance is between 6 and 7 at night. It's like an open range, only you don't get to choose the size of the open range. You don't get to choose if it's going to be 30 minutes or 1 hour or 5 minutes. It's just 1 hour. It's always 1 hour. It's open range. So I just wanted to point that out. I named it Asian Cloud. You can call it whatever you want. If you look in the Discord, you will be able to find it. You can search for it in the upper right corner of that Discord. I am forever being hounded by people who don't know how to use the search feature, or maybe just don't want to. Search feature in the upper left. Type in the word Asia and you'll see Asia range. And click on that. It'll take you to the post and it'll take you to the share link. Bum, 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 bum. So use the search features, right? The way I usually present it to people is you saw on my chart one single thing and you are asking me for it. If you were to go into that Discord where there's over 1,000 different indicators and charts and scans and watch lists, imagine what you could find in there that you didn't see on my chart. All right, for today. We are range bound. We are sitting inside of yesterday's price action. We have an ADR of 2.65%. So from our current location, we want to game out the three scenarios. We can stay range bound, we can break to the upside, or we can break to the downside. It really is that simple. It's one of the three things that we can do today. Now notice this green line way up here, 4202. This indicator is ignoring Monday, and it's treating everything as if Monday's high is directly a part of Tuesday's price action altogether. So this green up here, 4202, that's considered the high of yesterday, even though it was really the high of Monday's Globex. And 4100 is the low of yesterday. So it's why we make the distinction between yesterday's RTH high and yesterday's Globex high. And like I mentioned in the morning briefing yesterday, treat Monday's market as if the data there is a part of an entire one single Globex. And if you do that the way that the indicator is doing that, then it will treat everything from Friday's close to yesterday's open as one single Globex event. And then you had yesterday's open, which is one single RTH, and it would not recognize Monday's RTH. It is very likely that we stay range bound inside of yesterday's price action. It is a very large range from 4,200 to 4,100. We have an ADR right now of $109, right? 2.65%, $109. That's just about the range that we have here, right? $9 short, but still pretty close. If we were to make a topside move, we would first have to get through our own Globex high. We would then begin focusing on the institutional pivot points like yesterday's RTH. That's 4168. That yesterday's RTH lines up with the open on Monday's RTH. Even though we combine all that data, the indicator still recognizes where the RTH was, the open. And then we would focus on a pivot minor, which would be the cash session high, 4187, and then 4202. Like we usually do, we want to ask the question, is that even attainable with the standard ADR that we have at the moment? And yeah, just to get above the high from Monday's Globex, that would be a 1.5% move. We've got a 2.6 ADR. So we could move 2.6 and it wouldn't even be considered an outsized or an extreme move. 4250 is the line that I would focus on, because if we get that close to it, we're very likely just going to go ahead and go on up to it. So 4250 would be our ADR move of today. That would just be normal. If the market was to get extreme, then it would easily surpass that ADR target. For a downside discussion, we would look to break our current Globex low, then the RTH low of yesterday, and then we would expand towards the ADR. Notice right now where price is tangled up, it's yesterday's regular session open. So a 2.6% move to the downside would put us very close to 40, call it 40.30. All right, so there's our ADR targets. That would be considered a normal move. So if we're going to go above and beyond normal, then we can take that ADR and add another 50% of it for what we could consider extreme. So as we've been talking about, if you use the linear regression drawing tool, snap it across, you can see how we've built this base And these swing highs and swing lows have now begun the turn, right? And we've got our first higher high from this high. We may have just started to see our first higher low, but the swing isn't done yet. So we don't want to validate and say that that's our higher low yet. And for a full set, you want 2 higher highs and 2 higher lows to validate this reversal. And if you think, well, oh my gosh, I'll miss all of that price if I wait for validation, I agree. I'm not the one to tell you to wait and make sure that you validate a move before you get in. The longer you wait to validate, the less of the move you make. It's just a function of choices, right? If you get in early without validating, you can use a smaller stop and you get the meat of the move. Meaning when you do lose, your other trades that did get the meat of the move made you enough money to cover your losses and still have a profit afterwards. But you will lose more often if you trade without validation. And that doesn't bother me because I'm not trying to play a video game where I keep track of my winning and losing score. Trading isn't about winning and losing. It's about keeping your losses small when you lose and maximizing your winning trades as much as possible. So if you wait for validation, you will lose less often, but you will get less of the meat of the move, and you will very often need a bigger stop. So you have more money at risk, you make less money in the move, but you also lose less often. So I'm not here to tell you to wait for validation or that waiting is the right thing to do. I am just mentioning that if you want a full validation, then you need a full set. It's 2 higher highs and 2 higher lows, and that makes a full set. Mapping out the 5x5, yesterday's point of control has already been touched. That does leave a value area low and high. I don't normally carry those forward, but that doesn't mean you can't. If you get into technical analysis, they talk about carrying forward the value areas, and you'll treat them just like you treat the point of control, meaning they're touched or they're untouched. Hey, knock yourself out. I've already got enough lines. I don't focus on this one. But if you notice the value area low that I just put a line on, it's also yesterday's low. So I would mark it because it's yesterday's low. I wouldn't mark it just because it was a value area low. To each their own, right? Either way, that spot gets marked 4102. There's no point of controls in our range. So looking at the 5x5 doesn't really provide any input today, but we still would have wanted to look anyways. Now we're looking at a 10-day, 30-minute chart. There's no magic to the time frame picked here. Corey Rosenblum wrote a book about how he applies volume profile, and in his day trade, quote, short duration trades, he focuses on a 10-day, 30-minute. And then for his swing trades, he focuses on a 20-day, 1 hour. One thing in his book that I like that he talks about is be consistent. His numbers or his chart time frame is what was working for him. It's comfortable for him. It's what he likes to do. If you don't like these time frames, choose a different one, but stick with it. Try it for a while. Be fair about your trial. Give it a good 6 weeks or 2 months. And at the end of that, if you don't like it, you will know that you don't like it. And you will have a very informed opinion. And it's the only opinion that matters, yours. And you'll know if you want to make the chart time frame bigger or smaller, or the amount of days larger or smaller. 10 days is 2 market weeks. It's half of 1 market month. So there is a little bit of method to the madness. Looking at the ES here on the 30-minute, 10-day, you can see that we've got aggregate volume right underneath our current position, a significant level of volume, but not yet even close to the point of control volume. We've also been spending a significant level of time here. Makes sense because we've been here, right, since Friday into the Globex Monday, Tuesday, all wrapped up into this range. So a lot of volume. We're still outside the volume profile. Here's the value area high, the value area low, and the point of control. And we're outside the box. When we are outside the box, we'll want to approach it from the idea and ask the question, are we moving back towards the box, or are we continuing to drive farther away from the box? There is every expectation that when you are out of the box, you expect price to come back to it. It's what we were talking about yesterday, because yesterday we were outside of the box as well. When you're on this page where you're looking at multiple days wrapped up into a single volume profile, look at the size of the profile too. What you're focusing on, or what you want to look for, is how much of this area is covered, right? Out of the entire 10 days, is the point of control and the value area high and low really narrow? For an example, if it was really tight like that, with the point of control sitting in the upper zone, say like that, that would be a very tight volume profile. This one's not so tight, it's pretty wide. We have volume by time in blue and volume by price in green. When you put those two together, you got a pretty good idea of how long we spent at a particular area and how much volume we've surpassed at that particular area. A break back up shows that there is no real volume resistance overhead. So if we're focused on a move to the upside today, then we just want to look left at those institutional pivot points: open, high, low, close, last week's weekly high, weekly low, weekly close, things like that. This is the anticipated range, bouncing back and forth between these cog lines. If we manage to break through that 4,200 area, then our next major turning point is going to be 4,300. Not today, but that's what we would focus on, right? Where are we going next? So what we're looking for today, with all of this economic news coming out and all of these different speakers, is a continuation of this change in sentiment that we've seen in the market. The change, like the MOC yesterday, that very large number, is just extreme. It stands out compared to what we've had lately. You want to look at things like the SPX and its option volume. Remember, the SPX doesn't have shares. You can't buy this thing, quote, with stock. But it's one of the most heavily option traded products out there. The daily average in options was running at around 50 million a day. Not in this, but in all of the market, about 50 million options traded a day. So when you see, 2.25 or 2.2 million of those 50 being traded in one single product, starts to drive home why this thing is so important to analysis. And this is just the SPX. There's also the XSP and SPY, and then there's the V series that also track the S&P 500. Then there's the ES futures and the MES futures. All of those are part of the S&P 500. And when you start tallying up all of that option volume, you soon realize that the S&P makes up more than 1/3 of the aggregate total volume in options. So using the S&P just as a divining rod or a tool, an analysis tool, like an indicator to gauge what's going on in the rest of the market, makes perfect sense. The S&P drives order flow everywhere else. So it's worth noting on a day-to-day basis what the sizzle is and how much activity is in here. If you're new to the word sizzle, that's a thinkorswim phrase. And it basically stands for 5-day average. 1.0 is normal. So if we're not even at a 1, then we're below normal. If we're above a 1, say we're at 1.25, then we're 25% above the 5-day average. Simple as that, right? It only sounds complicated if you don't know what sizzle is. If you want to learn more about sizzle, by the way, you can go to the Ticker Tape, which is a TD Ameritrade publication, and search for sizzle, and you'll find like 50 different articles that talk about sizzle. All right, for the NASDAQ, same thing, using that regression drawing tool. You can see how we have a significant swing, and that's what each one of these were, right? This is a swing. That's a swing. So you want to focus on how far away from the mean, from the middle, from the center, how far away have we driven? And is it in relation to a previous swing? Because there is an argument or an analysis logic out there that says if you move 2% away from the mean on the upside, you're very likely going to move 2% from the mean to the downside, at least. So when you see a big move on one side, first check to make sure this isn't a reciprocation play from the other side. It's not, but we would want to look. Then start answering the question, is this first pivot here a higher high? Yes, because here's the last one, right? We don't yet have a higher low here that we can validate. It has set a low, but we're not done with this swing. We got to actually come back up and leave that low behind before we can say, hey, we have a higher low. If we don't breach this, we don't breach that high, and we instead just kind of screw around here and then continue to go lower, then that won't be a low that we would mark. Yeah. Yeah. Makes sense. All right. Nice topping pattern. Nice move to the upside in the last few days, right? Kind of started, depending on what you're looking at, it kind of started Wednesday where we built up the compression, blew out into Thursday, massive move, carried over into Friday, and now we've got this bit of a topping pattern. Same argument here as with the ES. We can only do three things. We're going to maintain the range or break out of the range. We want to focus on an inside day breakout. That is the name of the play. We are right now inside day, right? We're inside of yesterday. There is a logic that says that we'll just maintain the range today. I like to break these ranges down into quadrants. If all of this, from this green line up here to this red line down here, if all of that is our range, then that's a very large range from 12.9 down to 12.5, basically, right? Just use some easy number, 400 points. That's a lot of room. So if I can break that down and make those ranges smaller, then that's what I want to do. Start first with our own Globex. That itself becomes a range, Globex high and Globex low. From that, you can use the low of our Globex to the low of yesterday, and the high of our Globex to, say, the high of yesterday, RTH only. Now, that's a very narrow range if we're just going to RTH, so you could extend that into Globex of yesterday. That range more naturally resembles yesterday's low and Globex low and Globex high to Globex high. But that still leaves one more zone from the Globex high all the way up to the Globex high of Monday. 4 different quadrants or zones that you could focus on. But all of that would still be one entire very large range inside day. But at least this way, you have milestones to focus on as well and pivot points. right? If we get here, where are we going next? That becomes a reversal zone. If we don't reverse there, we manage to break through it. Where's our next target? Where's our next reversal zone? Carried forward on and on, each one providing a goalpost to the next target or the next destination. All right, so with that in mind, our ADR right now is 3.6. So either marking from the close of yesterday or the Globex open this morning, measure out 3.6. And that gets us above 3,100. $13,125. I'll use the quarter. And remember, ADR is just normal. We could move this far and it wouldn't even be considered extreme. Take the same number, go the other direction. 3.6. Gets us down to 12.2 flat. Close enough to it that that's what I would focus on. $13,1 down to 12.2. That's a 900-point range. A little over 900 points. And the NASDAQ has the capacity, crazily enough, to actually hit both of those in a single day. But normally speaking, if we would do something like that, we already would have hit one side or the other. So while it is possible to hit both sides, at this point, after 12 hours already having gone by, it's unlikely that we're going to hit both sides at this point. Keep in mind that our afternoon is wrecked. If you're going to want to do a 0-day today, you have beige book at 2 o'clock. So normally the way I like to approach the 0-day is in the afternoon session, sometime past 12:30. As we get closer to 1 o'clock, I start considering what 0-day trade that I want. But on a day like this, you got beige book at 2. That's a precarious situation to be in. So if you open one at 1 o'clock, really consider a way to get out of the darn thing before 2. You don't want to be trying to hold a 0-day into an economic event like the beige book. If you want to learn more about these, by the way, so that you can work on becoming a little basement economic person, then you can go to where Thinkorswim gets their information from, the EconoDay website. So Thinkorswim does not write these descriptions. These are just imported from EconoDay. If you were to go to Google, search EconoDay, you will find the website that Thinkorswim links to provide those descriptions. And they're really good descriptions. They provide a really interesting perspective from a stock trader's point of view and from a bond trader's point of view. Now, last night in the chat, I did a walkthrough of the 3 XLs that we have to have if we're going to have a trend day. The XLF, the XLK, and the XLY. And it was all predicated on the idea that we would have a pre-market rally. Let's bring that up real quick so you guys know where it is. And we're not getting this morning, right? So, of course, last night we didn't know if we were going to get a follow through today or not. But just scroll back a little bit. Right there. We have these setups right now. Well, we did last night on XLK, XLF, and XLY. We need one of these 3 sectors if we're going to have a trend day in the S&P and the NASDAQ. Hey, Mohammed, how you doing, buddy? Well, we don't have the setup now. So I'm bringing it up because I want to make sure everybody doesn't see these and think, well, I'm going to go buy calls this morning because 6 said buy calls. No, 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 no. I wrote this last night. If we were to get a follow through, it's got pre-market tomorrow, right? Which would be today now, 6-1. We would want to see a pre-market rally above the close from the previous day or better above the high of the previous day. If you don't get that, then it negates the whole setup and you would focus on something else. So if you look at the XLK for an example, we're not above yesterday's open, and we're most certainly not above yesterday's high. We take the entire thing, throw it in the trash. And it would be the same for the rest. XLF. Now the XF actually closed in the upper part. So if you read what I had wrote, I believe that's the one where we said close needs to be above today's close. Yep, today's close price instead of yesterday's open price. If it had been a red day on the XLF, then we would focus on where it opened, but it wasn't a red day. So it needs to be higher than the close, and then it needs to rally above yesterday's high as a focal point for the trade setup, because we're just looking for an inside day breakout or a continuation play. Right? This is the way the chart looked last night when I was doing my analysis. What you can see is that we are inside day, right? We're inside of the previous day's price action. So what we're looking for, what I was looking for last night, is this morning to see a market rally above these levels and prepare for another breakout day. And I did mention in the chat, I'm not bullish, guys. I'm not. I'm only doing analysis for a long side push because every place I look at right now is saying that this is nothing more than a bear market rally and there's still a lot more downside to go and that they're all maintaining their short positions. Well, you know what happens when everybody goes to one side of the market? We usually do the other thing. So it's not the idea that I'm bullish. It's the idea that I want to continue to look for reasons to take a bullish trade and focus on seeing the market get caught off sides while still maintaining all of the trades that I'm currently in. Even the one that I put on yesterday, it was a bearish position. So a rally this morning would kind of go against literally the trade that I put on. There's my break even. I need Google to stay below that level in the expectation when I put the trade on that we would reject here and continue to make that move to the downside. So obviously, put your money where your mouth is. I'm bearish. Still want to run analysis for a bullish scenario. For today, what do we have in the sectors? Everything is green, right? Well, half, 3/4, most. When we start looking at what isn't green, focus on how much. 0.5 is my starting point. So when I see these names that are down and they're not down at least a 0.5%, I don't really consider them down. More flat than anything else. Also, be careful with what platform you use. I'm using TrendSpider. If there has been no activity this morning, TrendSpider will reflect pre-market values from after hours yesterday. So it may show something that's up this morning that really isn't up. It was just up yesterday in the after hours, and then today it hasn't had any trading activity, and so it hasn't changed, and it's just stuck in that spot. So be careful what platform you're using when you do pre-market analysis, and make sure that you know, is it pre-market this morning or is it after hours last night? And most of these platforms will put those two together. They don't make the distinction and say, oh no, that was last night. So we got energy and energy, the devil's metal, silver, technology, emerging markets. You really want to keep your eye on junk and HYG. And when we're talking about the positive side, this side as well needs to be up at least 0.5%, right? Otherwise, I don't consider it to be up either. So there's a whole lot of in the middle, a lot of wishy-washy indecision this morning. Makes sense. We had a sideways day yesterday. We've got a sideways day here in the Globex. Those S&P legacy sectors, though, kind of leave us a little blind. They don't dig deeper. We don't have a crypto sector, for an example, in the old school 11 sectors of the S&P. So we want to break that down and ask, well, what's crypto doing this morning? Anything that really stands out? Now, this list has names that are heavily vested in blockchain. It also has crypto names in it. And then it has companies that are just heavily invested in crypto. So when you're looking at the list, it does help to kind of grasp which one of these fit whatever category I just named. So crypto's a little bit of a mixed bag. Nothing really extreme, but a few names stand out. Mara, PayPal, Riot. But all of those that I just mentioned, I mean, they're just barely up, right? They're less than that 0.5%. Electric vehicles market. Same thing. The S&P 11 sectors of the S&P, we don't have a breakdown for the EV market. So we want to make our own. Tesla's basically flat. It's down, 0.1%. Otherwise, things are looking reasonably decent. Ford and GM are both above 0.5%. Lucid, Ride, NIO, XPEV, Li Auto, all doing really good this morning. But make sure it really is this morning, right? Make sure that's not after hours data from yesterday. And we can see that, Li Auto, for an example, has had trading activity in the pre-market this morning. So it's not using after hours data from yesterday. Wow, NIO is really primed for a play here. Might see a 50-line breakover on NIO today. Or even better, better for me, I'm a little bearish. Better would be perhaps a rejection off of the 50 and a continuation to the downside. Keep in mind that you have higher low and a higher high off of that low. And then we do not yet have a higher high, right? So that's basically where the argument is here. Are we going to get a higher high? Or are we going to reject there? And Trader J just shared in the Discord some news about NIO. They're adding battery swap stations in 34 locations. Cool. Always check the news, guys. Always know the widget of the company that you're making or trading. So if it's Netflix, that'd be subscriber numbers. AMD, a new chip. NIO, production numbers, and perhaps battery stations. Everything out there that you trade has some widget of some kind. You always want to know what that widget is so you don't get caught with news that surprises you. And Namita points out that they have announced their monthly delivery numbers around 7K. Now, she didn't say that was a hit or a miss because, there's very likely an estimated production number that was given before they published. But that's the next step, right? If you're going to go and trade something. Now, for a day trade, it doesn't necessarily have to be that deep of a dive into things. But if you're going to take a swing trade, you would want to know what the heck you're trading. All right, the pot stocks are looking pretty good this morning too. And the reason that we're going through these extra sectors is, 9 out of 10 companies do what the S&P does. So when I have people reach out to me in the middle of the day and they say, hey, do you think Apple's going to break this level and go up? Hey, do you think Google's going to break this level and go up? You think Tesla's going to break this level and go up? 9 times out of 10, my answer is, I don't know. What do you think the SPY is going to do? You think the SPY is going to break through that level and go up? Well, I don't know. I'm not looking at the SPY. Nope, but you should, because each of those companies are going to be doing what SPY does. So if you want something different than SPY, you have to focus on things that are not moving with the indexes. Look at their beta. Trade commodities or bonds or the dollar or the VIX. Trade energy or pot stocks, something that deviates from the norm and that has a beta less than 1 or a negative beta correlation to the S&P, so that you can diversify your trades and at least diversify what it is that you're focused on. Otherwise, if SPY has a range day, everything's going to have a range day. Energy is looking good this morning. We had a significant move on oil yesterday. A little bit of a head fake before it dumped down. And then there was talk about not allowing Russia to participate on, the name of it escapes me, but that drop was news related. I shared the news announcement when it came through yesterday on Finance Juice. And right now we're basically looking for a recovery in energy. If we're going to have a play or not that reciprocates these moves back up. Now notice where oil stopped on this rally. And that's because when you get a significant liquidation break like we had yesterday, it leaves a liquidity vacuum behind. And what you often see is price coming back up and basically resetting. It's like closing a gap. And I know, I get it. There is no gap. You see candles just like I do. There are candles there, but in the analysis terms, there is a liquidity vacuum here. There's a liquidity gap that needed filled. So price eventually reciprocated back up and closed that gap. Now, if it maintains its bearish or bullish posture, it still has this gap result. Got the dollar on the move. The bonds continuing to break down. Yesterday, we had stocks and bonds moving in the same direction for a while. We really want to see both of these, the dollar and the bonds, quit moving around and just kind of maintain a range. We don't want to see big, exaggerated moves on either direction, right? To the upside or the downside. And we continue to use that phrase when what should happen doesn't happen. So, for an example, when stocks go up, bonds should go down, or when bonds go up, stocks should go down. But should and is are two completely different things. And what we've seen lately is both of these things moving in the same direction. So just be prepared for that. If that's what's happening, acknowledge it, recognize that you're in an elevated risk environment, and look for them to decouple. So if you got stocks and bonds both moving up and both moving down, look for that to stop. They'll each get to a resistance area. One will break through and the other one will reject, or it'll be a support area and one will bounce and one will fall through. Look for them to diverge from each other. And we're not talking one single candle at a time, more about in aggregate. Are they both at support? Are they both at resistance? Did both of them fall through that support, or did one bounce and one fall? Look for that divergence. Notice the NASDAQ this morning is maintaining this trendline breakover, and it's only a 15-minute trendline breakover, but still, trendline breakover with a lot more conviction than the S&P's trendline breakover. The NASDAQ is leading this morning, and the S&P is following this morning. That can change at any moment. Just recognize where the leadership is so you know what sectors to follow down. For my day trades today, it's very likely going to continue to be finance and energy. They're cheap names, highly liquid, great options to trade. They have a significant daily movement, so there's plenty of everything in there. So I got for you guys, be careful, be safe. I'll see you all tomorrow.